introduce the presenters today. We have 3 of the BCAR affiliate members, and we thank them for taking their time out of their busy schedule to do this for us today. We have Greg Kramer, who is the owner of Newtown Insurance, an Allstate agency. He's been an insurance agent for over 20 years and specializes in new homeowners, and he welcomes people to the process. We have Tim Swartz, who has been an insurance agent for 30 plus years. And right now he's been working with AAA insurance for over 5 years. He's a certified insurance counselor and a certified insurance representative. And he's had other positions, including COO and CEO of different insurance companies. And finally, we have Cheryl Evans, who is the owner of Carnanco. Hopefully I got that right. A business consulting coaching firm. She combined her 30 plus years of study and practice of ancient Eastern philosophies with her 20 plus years of title insurance, real estate, and business consulting experience that helps businesses grow and thrive. She provides unique, customized solutions to everyday business problems. She specializes in marketing, technology, and operations consulting. So again, we want to thank you all for doing this, and I'm just going to mute myself and let you start, Greg. Thanks.
Well, thanks for everybody for coming. I am a co-manager of the affiliate program, so I forget what our actual title is, but we run the affiliate program and have the joy of giving you guys some education. Hopefully, we find topics that really help you guys. Just want to make you aware, remind you about Bucks Breaks coming up, as well as Education Palooza, which really can't happen without the affiliates. So make sure while you're there that you take the time to actually get to know some of the affiliates and what they have to offer. Not all of us are insurance agents. So there's a whole lot of them that do other things besides insurance and mortgages. So today we have a great topics on title insurance and flood insurance and some other just need to knows for your customers when it comes to insurance in general. Tim's going to start off and just going over some information on FEMA. I'll come in and do some stuff on private flood insurance as well, and some homeowners insurance things and ideas. And I'm sure we'll end with title insurance. We'll do all questions, if you don't mind, through chat. That would be fantastic. And we'll go ahead. Go ahead, Tim.
All right. Thank you very much. Just give me a moment. I'll share my screen here. And if you could just let me know when you see from the beginning there.
We got it.
Okay. All right. So again, my name's Tim Swartz. I work with AAA in Warrington branch. There are several branches around the area that take care of our members, also non-members. So what I'm here to talk about today is just specifically about the new flood insurance rating that went into effect April of last year, and that's had some significant impacts on flood insurance rates and how things are done. And I'm going to start off by saying I am not a know-it-all with respect to flood insurance. If you have a question, please let me know, and I will be happy to answer those, doing research if necessary. So with that said, I'm going to give you a little background with respect to some flood insurance, where we were and where we are and where we're going, and what I kind of see as the path forward in the future with respect to flood insurance. So let me just, why is it not advancing? There we go. As I mentioned, I'll do a quick little short history about the National Flood Insurance Program, just to give you kind of a little backstory on how flood insurance came to be. So basically, prior to 1968, if you had a flood, you're completely on your own. 1968, the federal government developed the National Flood Insurance Program to enable people in communities that were monitored by the National Flood Insurance Program to be able to purchase flood insurance. Then in 1973, some homeowners were required to purchase flood insurance in high-risk zones to comply with requirements of mortgage companies They would obviously protect their interests. And just some other facts here. 1989 Hurricane Hugo, there were National Flood Insurance Program paid out $375 million in flood damages. I know exactly where I was when that hit. I was standing in a football stadium when that front literally walked through the stadium, and I was warm one moment and then frozen the next, standing in rain on the sidelines of a football game. And then I toured down in South Carolina where that hit a few months later, in right over New Year's in 1990, and that was pretty amazing to see. 1995, Louisiana got spanked around with and $585 million of flood insurance claims were paid. And then boom, 10 years later, the big one, Hurricane Katrina hit $17 billion in flood damages. And that, many of those people did not have flood insurance. So there were, New Orleans is still recovering from that almost 20 years later. Excuse me. And then 2017, just a couple of years ago, there were 3 hurricanes that slammed around Florida and the South and the coasts. $6 billion paid for flood damages. And this is a really important one to consider here, or to note. As of this June, the National Flood Insurance Program is $25.5 billion in debt. And you can see there, after $16 billion of debt was forgiven by the federal government in 2017. This is a program that has been historically running in the red. Back in 2008, I was lobbying in Congress about trying to get the whole thing forgiven. Unfortunately, that has not happened. But what's really happened here is that it's a program that's needed to be revamped, and unfortunately has been, and it's going the right direction. Couple things with respect to what flood insurance does not cover. Second floor bathroom pipe, the damage to the dining room ceiling. Nope, that's covered under your homeowner's insurance policy. And then refrigerator water line, saturates wooden floor. Nope, that's the homeowner's insurance policy. Roots block the sewer line, a raw sewage enters a home, the damage is finished. Nope, that's not a flood. That's water backup, as we call it. Water backup of sewers or drains. So, but what it does cover, you get heavy rains that inundate a creek, dam, or levee, and that water then rushes over into the neighborhoods, and it has to damage 2 or more, or affect 2 or more properties by rising surface water. So that's, water's coming on the ground level, and then causing damage to a home or a covered building. And this is an interesting one that I've seen. I haven't personally seen a claim, but a flood expert told me about this one, where a neighbor's pool, an above ground pool that's set above at a higher elevation than this one property, that pool flooded the neighbor's home because surface water came and ran into their home and damaged their property. That's considered flood insurance. And then water main breaks. You've seen them in Philadelphia, at big cities especially, older infrastructure, and that can really make an impact in a community. And I'm gonna run this little video here. Hopefully it'll go. We'll see what happens. Maybe or not. It doesn't look like it's gonna go. Nope, it's not running properly. Sorry, it's a technical thing on our corporate end. But I was just going to show a video that happened in Philadelphia just a couple months ago. Flooded a whole, I believe it was in Northeast Philly. A whole neighborhood got swamped. And in 2004, I believe it was, in a section called Dundalk in Maryland, Baltimore, an entire neighborhood was swamped, and they took many hours to get the water main shut off, and then an entire neighborhood had flood damage. And it's not an area that would normally be inundated by a river or the Chesapeake Bay, but there was significant damage. And nearly everyone there had no flood insurance. So that's a real concern. So flood isn't just on the coast or right next to a creek. These other things can happen.
Excuse me, we can't see your PowerPoint anymore. Oh,
Oh,
now we can. Okay,
oh, sorry.
thank you.
Sorry about that.
No, that's okay. I just wanted you to know.
Thank you.
Thanks.
Thank you. Okay. So, and then now, as I mentioned, with rating 2.0 and the rating 2.0 objective, it's before the rating 2.0, the new program that came in April 2021, flood rates were pretty uniform for varying risks, and it was basically unfair, as I mentioned there. So, for example, here, I could tell you, if you told me your property was in a low risk X flood zone and you had a basement, I could tell you that the premium was going to be, for the maximum coverage available through the National Flood Insurance Program, was going to be $633, period. Done. You could be sitting on top of a granite mountain in Vermont or New Hampshire or in Ocean City, Maryland. That premium is going to be $633. Now, the objective is to make, with the new program, is to make flood insurance equitable and realistic for the specific risks that are being insured. So every single home is rated individually now. The max, and still again, as it was in the past, the National Flood Insurance Program has not increased the maximum coverage available to protect homes, which is $250,000 for the dwelling and $100,000 for personal property or contents. Flood elevation certificates, they might be necessary for some people. With respect to the flood insurance, though, it's not mandatory in most cases, unless somebody is in a very high risk flood zone and the let's say we were talking about it earlier, right along the Delaware River in New Hope, there are homes that would be in a high risk flood zone, but because they're elevated on stilts, you get a much better rate if there are mitigating properties to a specific location. So putting it on stilts, you're 20 feet in the air. You're less likely to be affected by a flood. So the flood elevation certificate, an engineer or surveyor comes out and measures and gives all the heights of property relative to the surrounding area and the flood prospects. And then the rates are based upon that elevation instead of assuming it's sitting on the ground. So in high risk flood zones, the getting an elevation certificate can make significant savings. Significant. So just I ran a sample quote for a customer of mine. I put myself in the shoes of that individual for the purposes of this, just seeing what it would cost. So there was a home in Bucks County, in Percy, along the East Branch Creek, and the property is an older home and is not elevated, and with a maximum value permitted by the National Flood Insurance Program, the annual premium for this home was over $5,000 a year. If elevated, they could be certainly in hundreds of dollars versus $5,000. And I've had customers who have purchased homes to buy and flip, or buy and hold and rent, but that buy the property and then they buy it cash, and then come to find out when they go to sell, the buyer might need a mortgage and they cannot afford the mortgage and the flood insurance. I had somebody very upset with me when they saw a $14,000 a year premium for a property. And they said, we can't do this. And I said, well, I'm sorry, but I can't help you in this case. So that's a real concern. is making sure in advance when customers are buying properties that they're aware of the flood risk. And those rates have changed over the past couple of years. And some of them were very, very significantly. Oops, let me jump back over here. Right now, when a rate is done, it's based upon, you put in an address and then it gives a GPS coordinate for that property. So it is very individualized. So my home might be 100 yards from your home before we were in the X zone, the low risk flood zone. That is no longer really the consideration for the final rate. So it's based upon where geographically that property is sitting, and its relation to flood zones and flood elevations. So that's certainly of a concern. In short, what this rating 2.0 does, it makes flood insurance much more equitable across the board for everybody. It might not be fun for somebody's wallet, but in the net, it's better for the whole program. There is a 30-day waiting period to initiate a flood insurance policy through the National Flood Insurance Program, except if you're going to settlement. And then it can be that date of settlement if it is within that 30-day period. And then when the effect of the rating, this rating 2.0, in the first year with the premium changes, there is follows. It's pretty amazing. Some of the rate decreases, up to $86 per month decrease for some people. But then some are having a 4%, the 4% of the policyholders are having over $220 per month rate increase. Now, it could be a lot over, but there is a maximum of an 18% rate increase per year under the National Flood Insurance Program. So the rates, from my prediction, and Greg, please jump in if you feel otherwise or have a contrary statement. I believe flood insurance rates are going to continue to skyrocket over time. Because of what's happening with climate change. And I read recently that some actuaries within the National Flood Insurance Program are concerned that what they've done that has improved the rating methodology to date is insufficient going forward. So that's kind of my personal prediction. I could be wrong. So that's my short and sweet spiel here with respect to the National Flood Insurance Program. And here's my dad joke. If you have a flood of emotions or want more information, there's my contact info.
Sounds good. And I'm going to just continue really down your path and go into it a little bit further. The one thing I did want to add on is the one question we get a lot is my house isn't in a flood zone, but my property is. And the FEMA does take on the highest risk of the property. So that's when a flood certificate or a flood elevation certificate really comes into play, because the elevation certificate is based on the property itself, not based, on the house itself and the risk, not the physical property. So quite often you'll have a creek running through a back acreage of a house, and they end up in an A or an AE zone, which is high risk, but the house itself is a little bit lower. So having that elevation certificate does help bring the rate down traditionally when it comes to flood insurance. I don't know if you can stop sharing. I'm not.
Thank you. Go ahead.
I don't have any. I don't have a slideshow to share with you guys. I'm just going to go over some information, and if it's helpful, I can always send it more to you. And I'll answer Renee your question regarding getting a flood elevation certificate before putting on the house on the market. They are costly, so it's not a simple $25 process to get done. If you're concerned about the flood, about the property, I would definitely say it's worth getting it done. You usually have to go to the township in order to get a surveyor out to complete them. And that can take some time. So I would just let property owners know, if they've never had flood insurance, it may be worth at least checking to see if they're in a flood zone now. Some people go in their homes 40 years, were never in a flood zone, now they are, just as Tim said. So, or a change from preferred zone to a high risk zone. So at least getting a base flood zone check would be good. The elevation certificate would be over and above, but at least would have that information available.
May I jump in, Greg, real quick?
Yeah.
With respect to the flood elevation certificate, I've sought that out nearby with a surveyor, and they focus on flood elevation certificates. And basically their pricing is based upon supply demand kind of thing and your urgency. I've seen, $300 to $600, and in certain places in New Jersey, I've seen them as high as $1,000 to pay to get that done. So just food for thought.
So I'm going to talk to you guys a little bit about private flood insurance. So with the rising costs of FEMA, private flood insurance has really come back on the market. And really since the last floods, major floods that had happened, it's become more and more popular. Again, just some things to think about. A homeowner is 27 times more likely to have a flood or water concern than they are any other situation in a 30-year mortgage. So really making sure they have the right flood insurance is important. And knowing that flood insurance doesn't really cover a lot is also kind of interesting. It's a requirement by the mortgage company, but it doesn't quite cover a huge risk. And private flood insurance isn't much better, but it is a different process. It does go up to 1.2 million on private flood insurance. It's a little simpler as far as the underwriting goes. There's only 12 questions. There's only a 15-day waiting period unless it's for a mortgage. So same as traditional flood insurance, private flood insurance, if it's for a mortgage, can be activated the same day as closing. So you don't have to wait that waiting period if there's a closing on the books. The private is designed to be a simpler, more accurate way to get flood insurance. There are some situations that private insurance will not cover. So there are some high risks where private insurance companies just say, hey, we don't want that risk either. 90% of the time, you do not need an elevation certificate. It does cover some things that traditional flood insurance doesn't cover, which is also nice. The average cost, where Tim showed you the average cost of FEMA, which Tim and I have no control over the cost of FEMA, whether that be private flood insurance or direct through FEMA flood insurance, they are set and you can't shop it. So Tim's rate and my rate, I would assume both of our rates will be the same. You go to somebody else that does it wrong, maybe it'll be higher or lower, but our job is to get it done right the first time so you don't have any issues. But the private flood insurance traditionally for a 2,500 square foot house might be about $1,100 versus the $4,000 that you might pay through FEMA. It is, I already told you it goes up to the million. Most carriers do now accept it. So a lot of issues we had in the past with private flood insurance is a lot of mortgage carriers did not accept it. As FEMA has become, I would say, more inundated and moving forward with their new programs, this private flood insurance has been accepted really by about 75% of the mortgage carriers. And I would say most of the clients that you're working with are using more traditional mortgage companies. They're going to accept the private flood insurance as well, which is really nice. Talking to an agent is really going to get you your best avenue. I'm going to kind of steer a little bit towards agent versus just telling your customers to go wherever. Tim and I both have 20 years of experience plus. Tim's even longer than I have. And the problems that I've found in the most recent years has been when realtors and mortgage people, for that matter, are just kind of pushing their people just to get the insurance and be done with it. Those are the little things that we find hiccups in. Finding an agent who's going to actually walk you through the process and make sure that your customer gets to closing is just so important. Being able to go over the different types of flood insurance and the process that takes is important. Allowing or asking your client to do that on their own really can cause headache, and it can also cause delay. I've seen multiple situations where, and I'm sure Tim can kind of concur this as well, where we've gotten calls a few days prior to closing, but just because they didn't have a reputable agent they were working with, and the closing was delayed by multiple weeks just because they couldn't get the flood insurance on time. So having an agent that's reputable is very important, that has different options for you is very important. Every insurance carrier, when it comes to homeowners insurance, does underwrite differently. So someone who's very competitive for Allstate might not be for AAA and vice versa. So we have different markets that we actually look at. And most carriers, even if they're captive, have multiple options. I know Tim has multiple homeowners options that he can search for, and I do too. So we're able to help really a range of people, whether it be an investor or that first-time home buyer or the flip or the downsizer. So using an agent is really just the same way you value, being a realtor and how important that is. Being an insurance agent is equally as important to the process and making sure that the customer really is prepared for closing and then prepared for homeownership, really. Handing a client that you spent all that time to find the right house off to someone like Tim or I is really going to just really make you look good, because it makes the closing go that much more smoothly. And then when there's a problem, God forbid there is, we're there to help them, which is nice. I saw a question, 2 different properties had surface water infiltration within 2 weeks of purchasing the property that were not flood zone, that was not in a flood zone. The first was sudden warm spits of rain that failed during a tropical storm. Just never know. Yeah, so really just more a comment, I guess. Yeah, you never know. And making sure you have your flood insurance at the time of closing is very important, even for cash buyers. You just don't know when that claim is going to happen. We get calls often a few days after closing from cash buyers who said, oh, we went to closing. We didn't really need the insurance. We decided to shop after closing. And then if something happens, it makes it makes it more challenging to find insurance when something like that happens. I don't really have anything else. I just really want to make sure I touched on private and how that it is another option. So as FEMA is a guarantee. Everyone's accepted by FEMA. Not everyone will be accepted by private flood insurance, but and not every agent can offer private flood insurance. So also knowing who and where that's available is important. We do have 2 carriers that we do private flood insurance with. So we're definitely here to help in any way that we can, even on just the flood insurance. I think that's it. If you guys have any questions, you can put it in chat and I'll chat that back to you. Tim, do you have anything to add?
I do. With respect to Renee's question there, the second part, having never had a flood in X number of years, would price go down? In short, with FEMA, absolutely not. Just doesn't happen. There's no good no flood discount. So that's
and that's also a fallacy when it comes to homeowners insurance. I've lived in my house 5 years with no claims. Will my rate go down? The likelihood is no. And Tim, you could probably back this up as well. I've been in insurance a long time. Homeowners rates don't go down. They often stay stable, but in markets like we've had and weather like we've had over the last 5 to 10 years, homeowners rates will continue to rise, just like FEMA rates will continue to rise. There's just not enough money to pay the claims. And just as your commissions are being cut, premiums are being cut as well. The insurance company is taking in less dollars. They're having to advertise less. They're having to do a lot of things in order to make sure that claims are paid. And raising rates is one of those ways. So those things are not going down anytime soon unless we drastically see a change to weather. And Tim, if you don't have anything, I'll turn it over to Cheryl. Cheryl, you can go. Let you go for like 20 minutes.
I do just have one quick comment with respect to rising rates. Just in the past 18 months, homeowners rates have kind of gone whoop, straight up in price. So there's several factors to that, inflation. But then also, I just read an article. I posted it on my LinkedIn page. Last year, the estimates were that the insurance fraud in the U.S. was $308 billion. That's more than the GDP of Portugal and Pakistan and New Zealand. So those $308 billion trickles down to everybody's insurance premiums. So just food for thought out there. If you see fraud, report it. You just call the insurance the Pennsylvania Insurance Department fraud hotline, and you just Google that and you'll find it, because that affects you and me.
Thanks, Tim. All right, Cheryl, you're up.
Great. Thanks, Tim and Greg. That was really informative. Put that on presentation. Okay, so I've got a presentation for you today covering everything you need to know about title insurance and title theft in order to protect your clients. So let's start with, well, what is title theft? And home title theft occurs when a criminal fraudulently transfers the property deed into their name. It's sometimes also called deed fraud. And home title theft is rare, but when it happens, it's the result of identity theft, and the loss is catastrophic. So there's a few home stealing scams out there that pop up in the news occasionally. Sometimes it has to do with somebody renting out a property that they don't legally own or shouldn't legally own. There have been reports in Manhattan. There were 30 properties that were targeted in Manhattan by a group of 4 people who forged deeds to sell those properties. It can happen with family members. There have been elderly couples who have had children or grandchildren who have attempted to take the equity out of their homes, cash in on that, or even sell the homes without their knowledge and consent. And there was even a Major League Baseball stadium that was transferred deed ownership to another person, and it wasn't caught for 2 whole years. So how does this work? There's several different types of scams that are run that all qualify under the title of title theft or deed fraud. Generally speaking, it involves criminals who are forging documents such as IDs, deeds, mortgage satisfaction pieces, loans, and other legal documents, all depending on the type of scam that they're running. They manage to record these documents at the County Recorder of Deeds office, and then eventually the surprised homeowner finds out that something bad has happened, usually because they start getting foreclosure notices in the mail for a mortgage that they never took out. Or it's an investment property and they find people living in it when it's supposed to be their vacation home and it's supposed to be vacant. Those are 2 pretty common ones. So by the time the fraud's been discovered, sometimes it's too late to do anything, or so late that it makes it very, very difficult. Proving that there was actually fraud can be difficult to impossible. And it's on the homeowner or the rightful property owner to take it to court. You can file a police report, but ultimately you're going to end up in civil court and fighting over identity theft. And that's all going to come right out of your pocket. And those attorneys are not cheap. And you can also have other damages. You can have foreclosure processes that are already underway. You can have tax sale seizures that are already underway by the time a homeowner finds out that something has happened. Maybe their credit has been damaged. So there's a lot of things that can happen to the homeowner and to the property that they're not going to recoup those losses, even if they do manage to win in court and prove that it was fraudulent. And a lot of times, by the time they find out, whoever perpetrated the crime is long gone, and finding them again can be nearly impossible. And you might be thinking, okay, but nobody actually does this, right? I ran a report in preparing for today's presentation, search on Google, and news reports as of August 27th of 2022. And there were 5 right at the top within just a couple of weeks of that search, all over the country that were showing up. So while it's not happening in vast numbers, it is happening. ABC News examined the title theft and some of the services that are advertised to help prevent title theft. And they interviewed a few people who really know an awful lot about what's going on nationwide in the title industry. The American Land Title Association, they said that their members are not seeing the problem nationwide. The Public Records Industry Association said that the problems seem to be confined mostly to urban areas. It's not something that's seen in Middle America very much. But authorities in both New York City and Philadelphia describe title theft as an epidemic, and they are dealing with large numbers of reports. And so for anybody in the Bucks County Association of Realtors, that's certainly something that you want to pay attention to, because, you know, that's right next door. And things like this can sometimes travel. So what's at stake? You know, what happens when somebody's title is stolen? According to the US Census Bureau, the typical American's net worth at age 65 is just under $200,000. And when you remove the home equity from that net worth, it plummets to under 50,000. So when an elderly person is the subject of title theft, they're looking at losing all of their wealth, which may also be part of what they are relying on for retirement. They're looking at losing their home. They're looking at losing their financial stability. The impact is really catastrophic when it does happen. And primary targets of this crime are elderly homeowners and investors. Elderly homeowners are primary targets because they do tend to have a lot of equity. They unfortunately can be easier to be tricked and taken advantage of. And their home is more likely to be vacant for an extended period of time if they are in a care facility or a rehab facility for medical purposes. And so that makes them primary targets. And one I didn't add on here, but unfortunately, it also makes them primary targets for unscrupulous family members who have a lot more information about their situation. Investors are also primary targets. And when I say investors, I am including people who own second homes, vacation homes, rental properties, other types of investment properties, and undeveloped land. And the reason that investors tend to be primary targets is that they're not generally living at the property. So they may not receive notices in the mail that are sent to the property address of foreclosures or tax sales or other things that may be going on. They may not notice activity happening on a property that's supposed to be vacant. A vacation homeowner, they may only visit that home for a week or two out of the year. And they could be, several states away. And you could have people moving in. Somebody could have stolen the title, put it up on the market to rent it out, and could be collecting rental income from an unsuspecting family. And now the true homeowners show up for their week-long vacation, and there's people living in the home. So that could go on for quite some time before they notice any kind of activity there.
Cheryl, we have a question regarding trusts. When a house and title is held in a trust, do you find that to be any different with investors, elderly? I mean, I would think that typically happens when it gets moved from whether in wealth situations or elderly. Even some investors, I guess, would also do trusts.
Yeah. So a property that's being stolen and putting into a trust, probably not as likely, or even a property that is already in a trust and trying to steal it out of the trust. Probably a little bit less likely to happen simply because there's more paperwork involved, which means more forgery to take place. But that's not to say that it's impossible. Sometimes all it takes is just a forged power of attorney, and away you go to sign off on any kind of document whatsoever. So, it might make things a little bit less likely, but I wouldn't rely on it as a means of protecting yourself. So how do you protect yourself, your clients? The first one is education and prevention, and all typical advice for identity theft applies in this case. So, make sure you keep your personal information private, make sure you're reviewing your bank account statements, your credit reports, any kind of mail that's coming in. Make sure that you're opening mail that looks a little unusual, because it could be a notice of foreclosure from a bank that you never signed a mortgage for example. So, those standard sorts of identity theft, good advice stands in this situation as well. And then to take it to the next level, it's also good to be aware of the signs of home title fraud and how to spot them. And this is really important for real estate agents, because there could be title fraud on both the selling side or the buying side of a transaction you're actively involved in. Maybe somebody obtained title fraudulently and they've now retained your services to help resell the property. And, you can get caught up in that unsuspecting, thinking you're dealing with a legitimate seller. Or on the other side, you could be, working with a buyer and, have a theft situation going on. And again, be unaware of that situation. So spotting signs of home title fraud while it's in action, it's a matter of being aware of who you're working with and communicating with them and having all of the right paperwork validated. So some of the ones on this slide are more about spotting signs of fraud after it's happened for the homeowner. Receiving financial documents from an unfamiliar lender, finding out that you've defaulted on a loan that you never requested, receiving notices of foreclosure proceedings or tax sales, a sudden rise in utility bills for a vacant property for your vacation homeowners, or discovering that somebody's paying rent to somebody who's not the homeowner, would all be signs. When you're working with elderly people in an active transaction, definitely be aware of who you're talking to and who's giving you all your information. If you're working with a caregiver, you want to be extra cautious because you need to validate that caregiver is a legitimate caregiver. It's always good to make sure that you have communicated with the elderly client directly and in private, if possible, to make sure that they understand what decisions they're making and that they're not being pressured to do something that they don't want to do, to make sure that they're cognizant of the decisions that they're making. Those are all key things to keep an eye on. You always want to be wary of out-of-state sellers. You want some extra due diligence there of validating that they truly are the right people. And your biggest protection and your client's biggest protection from an active title theft, fraudulent transaction is to make sure that you're working with a title company with the expertise and the diligence to do their job and do it well. A title company that doesn't ask too many questions and never bothers you for paperwork might seem like the dream title company to work with because they're easy. And they're probably a lawsuit waiting to happen for a lot of reasons. You want a title company that asks a lot of questions. You want a title company that asks for all of the paperwork because that's their job. And that's why they have attorneys that they work with and they have a ton of training. And you want that title company who is going to go the extra mile to make sure that all the I's are dotted and T's are crossed and that everything's taken care of. That is the best protection for your clients and for you, because you don't want to get tied up in that lawsuit. So you may have seen ads for services for home title monitoring. And while these services are not an outright scam, they're not exactly honest either. And you may be fielding questions from your clients about this because these advertisements are all over these days. So it's good to understand what it is and what it isn't. So title monitoring, they search the recorder of deeds records. This is the same thing title companies do every day. When they get in a title search, you're always hearing they don't have the title commitment yet because they're waiting for the title search. That's what they're doing. They're searching the records for the recorder of deeds office. Title monitoring, they do the same thing. They don't have any special access to anything. It's the same records that every title company has been searching for hundreds of years. they are only able to report a title theft after the crime has occurred. Title monitoring does not lock your buyer's title. It does not prevent the crime. The services that they offer to help resolve the problem after the fact, they could be limited, and they haven't really been tested a whole lot. So there's not a lot of information out there to validate if they provide a real help to somebody who has been a victim of title theft. Title monitoring is very similar to credit monitoring. And but credit monitoring companies have been around for a lot longer, and we've been able to hear the stories of people who have been victims and who have had to use the services offered by these companies to help them deal with the legal consequences after the fact. We don't have that data yet from these title monitoring services. So it's really hard to speak on just how much help they may actually be. And so how does that compare to title insurance? Well, title insurance also does not lock your buyer's title. Nothing can lock title. There's no such thing. It doesn't exist. It's not real. Title insurance does not prevent the crime unless they happen to be the title company when the crime is happening. A title company can prevent title theft from happening in the active transaction where the title's being stolen. If they're doing their job and they're checking all the paperwork and validating information, they can potentially prevent a theft from happening when they catch it in the act. But a lot of times title theft happens without a mortgage company being involved, a title company being involved. It happens on paper without anybody knowing that it happens. And then there might be a transaction after that to resell the property or to mortgage the property, where they're then getting the financial benefit from having stolen the title. A title company can potentially identify fraud and other problems that happened prior to your buyer's transaction, and then be able to protect your buyer from buying a property from a fraudulent seller. So that is a place where title insurance does also happen in the world of title theft.
And Cheryl, since you're talking about this, there were two questions. I think both of them pertain to what you're talking about now. One of them I think you already answered, so I think I'll just ask it, restate it again, but I think you already answered it. There's no extra title insurance that you can buy that would prevent this from happening. So you just did that on your last screen, which is
there is extra, and that's my next point. So I'll talk about that in a moment.
And the other one was Bucks County Recorder of Deeds will let you go on a list to be contacted if anyone recorded against your deed or tries to record against your deed. Is that good? And is that something?
It is. And I will actually get to that point as well. So yeah, but excellent questions. So in blue at the bottom of my screen, my last point here is, and the biggest takeaway, if you're going to learn anything from anything I have said today, your biggest takeaway right here is the enhanced owner's title policy. It is available in all 50 states for 1 to 4 family residential properties. It has been available for a very long time. The vast majority of title companies do not sell this policy. They don't even tell you it exists. I don't know why. Blows my mind. I don't know why, but it's out there. It exists. Every title company in the country is capable of issuing this policy, whether they offer it to you, whether they tell you about it or not. They're capable of doing it. They have the right to do it. And the enhanced owner's policy provides full insurance coverage for deed theft as of the date of recording. It also provides a whole bunch of other protections. There's about 30 additional coverages that you get when you purchased an enhanced owner's policy instead of a standard one. And the price in Pennsylvania for an enhanced policy is only 10% more than the price for a standard policy. It's set across the board. Every title company, same price. It's managed by the state. 10% when you're talking about a title premium, you might be talking about $100-200. You're not talking about a lot of money. It's well worth that price. All you have to do is ask your title company for it. Ask them for the enhanced owner's policy. You'll have that protection along with a whole bunch of other really great protections. And while that still won't stop a title theft from happening, it does mean you get that full insurance protection when it happens. Just like when you have car insurance, and you have that full insurance protection when you're in an accident, or your flood insurance, and you have that full flood protection when a flood happens. the enhanced title policy works the same way. It's not going to prevent the theft from happening, but it is going to give you that full insurance protection if it does happen. And then the free title monitoring services. Bucks County, Chester County, Delaware County, Montgomery County, and Philadelphia counties all are offering free title monitoring services. And because they're free, absolutely make sure every single one of your buyers signs up for this. It's not going to prevent theft. It's not going to stop it. But what it will do is provide that notification immediately. I mean, we're talking within at least a couple of days, if not hours of it happening. And when you can act fast, you stand a much higher chance of catching the thieves and stopping everything in its tracks before you're getting foreclosure notices and tax sale notices and people moving into the property to rent it and then damaging it and all kinds of other problems. So absolutely all of your buyers should be signing up for these free title monitoring services that are being offered by the counties. And I only checked for the 5-county area because I think most of our audience here today is going to be that interested in it. But if you do, work a little further north, or maybe you travel across state lines and into New Jersey to do some of your business, certainly double check if those counties are offering it, because this is becoming more and more popular. And why pay for a service when you can get it for free?
Cheryl, are you finding any E&O issues when it comes to the realtor or the title companies for not offering an enhanced title? I know Tim and I both would have potential E&O issues if we didn't offer a product and then there was a claim. Are you finding that there's more E&O issues on realtor side or title company side for not offering
No.
it because people don't know about it?
Yeah, it is kind of surprising, and maybe there should be. But no, I have owned title companies in the past. I don't own any at the moment, but anytime I've ever filled out an E&O application for a title company, they don't even ask if you offer enhanced policies. So, they should, but they don't. But yeah, the enhanced policies are definitely well worth the money. They provide an awful lot of coverage. And so to kind of just sum this up, this presentation was just one chapter in a full course that I offer for real estate agents. That is everything you need to know about title insurance to protect your investments and your clients, and how to create smoother transactions so that you look like a superstar. And you can also follow me on social media. I provide a lot of free business tips and tricks because I have been a business consultant for a very long time with a specialty in the real estate field. And certainly if you have more questions about title insurance or anything else, feel free to reach out to me. I am always happy to talk. I'm always happy to network. And does anybody have any other questions?
I just want to add to what you were saying, because I think your topic was fantastic. And
Thank you.
As a realtor, I'm not a realtor, but if I could get any advice to realtors that are on here and that are going to watch this later, I would add this to your checklist of things that there is an enhanced option available. Lawsuits just become more and more popular. The blame game is always available. And if this happened to one of your customers and they found out that it was available and you did not offer it to them, that could be a potential E&O lawsuit. And there aren't many realtors that I know of that actually cover themselves with realtor insurance. They rely on the broker. So this would be a way to really protect yourself as a realtor. At least letting your clients know would be something that's very worthwhile.
That's an excellent point, Greg. And I will say, I do actually have a list that breaks out all the extra coverages you get from the enhanced policy. So if anybody wants a copy of that, feel free to send me an email and I'll send you a copy, and it's something that you can share with any of your clients if they want to know more about it. So yeah, and if you have your favorite title company and you ask them about it and they claim they have no idea or that they can't do it, feel free to have them call me. I will happily talk to them and explain it to them so that they can sell it to you.
And just food for thought. This is Tim. I recently, within the past 2 years, I live with my girlfriend. She owns the property in which we live. And when we redid the title, fortunately for us, this was offered. I'm like, I don't care. I'll spend the extra money just for that cost differential. And so that is something certainly I figured I'm an insurance guy. It totally makes sense to me. So bought it.
That's fantastic. It was even offered. I love hearing when it is offered. I've been a proponent of it for a really long time. I'd really love to see it offered more often. All right, any other questions? Okay, well then I'm going to turn it back over to the Bucks County Association of Realtors, and thank you so much for hosting us today.